If you own even a single ounce of silver, or you've been thinking about buying silver, do not skip this video. Because what I'm about to show you could completely change your understanding of what's happening in the silver market right now. 3 days ago, something happened in the silver market that most investors completely missed. Silver broke through a critical resistance level at $32.50 per ounce. Now, you might be thinking, okay, prices go up and down all the time, but here's what makes this different. The last time we saw this kind of technical breakout with this kind of volume was in early 2012. And within 6 months, silver had surged by 47%. But the fundamentals behind this move are significantly stronger than they were back then. Let me show you the data. According to the Silver Institute's latest World Silver Survey, global silver demand hit 1.2 billion ounces in 2023. That's the second highest level ever recorded. But here's the kicker. Mine production was only 822 million ounces. That's a deficit of nearly 200 million ounces. And this isn't a one-year anomaly. We've had supply deficits for 3 consecutive years now. Now, where is all this demand coming from? 3 major sources. First, industrial demand. Silver is absolutely critical for solar panels, electric vehicles, and electronics. The solar industry alone consumed 140 million ounces of silver last year. And with governments around the world pushing green energy mandates, that number is projected to grow by 15 to 20% annually. Second, investment demand. In 2023, physical silver investment, including coins and bars, reached 273 million ounces. That's up 18% from the previous year. People are waking up to the fact that silver is massively undervalued compared to gold. The gold to silver ratio is currently sitting around 88 to 1. Historically, that ratio has been closer to 60 to 1. When it reverts to the mean, and it always does, we're looking at significant upside for silver. Third, and this is the big one that nobody's talking about, central bank activity. Now, you've probably heard about central banks buying gold at record levels, but what you might not know is that several central banks and sovereign wealth funds have quietly been accumulating silver as well. Why? Because silver has monetary value like gold, but it also has industrial utility that gold doesn't have. Let me give you some real numbers here. The US Mint sold over 44 million silver eagles in 2023. That's the highest sales figure in years. And in January 2024 alone, they sold over 5 million ounces. The Royal Canadian Mint, the Perth Mint, they're all reporting similar surges in demand. Physical silver is flying off the shelves. Now here's where it gets really interesting. The COMEX, which is the major exchange where silver futures are traded, has seen its registered silver inventories drop dramatically. In 2020, they had about 150 million ounces of registered silver. Today, that number is around 42 million ounces. That's a drop of over 70%. Registered silver is the metal that's actually available for delivery. When that inventory gets this low, it creates extreme pressure on prices. And we're already seeing signs of stress in the physical market. Premiums on physical silver coins and bars have been elevated for months. Normally, you might pay $1 or $2 over spot price for a silver coin. Right now, premiums are running $4 to $6 over spot. That's a clear signal that physical demand is outstripping supply. But let's talk about the elephant in the room, manipulation. For years, silver investors have complained about price suppression in the paper markets. And while I'm not going to make wild conspiracy claims, there have been actual legal cases. In 2020, JPMorgan Chase paid $920 million to settle charges of manipulating precious metals markets, including silver. That's not speculation, that's documented fact. Major banks have been fined for spoofing and manipulation in the silver market. What does this mean for you? It means that the paper price of silver may not reflect true supply and demand fundamentals. And when that disconnect becomes too large, the market corrects violently. We saw this with nickel on the London Metal Exchange in 2022 when prices went absolutely parabolic because physical supply couldn't meet demand. Silver could experience a similar squeeze. Now, let's talk about what's happening in the mining sector, because this is absolutely critical to understanding where silver prices are headed. Silver mining is not like other commodities. About 70% of silver production comes as a byproduct of mining other metals, primarily copper, zinc, and lead. Only about 30% comes from primary silver mines. This creates a unique situation. When copper or zinc prices are low, mining companies cut production, which means less silver gets produced as a byproduct. We saw this during the pandemic. Many mines shut down or reduced operations. And even though they've ramped back up, we're still dealing with that supply deficit I mentioned earlier. But here's the bigger problem. We're not discovering new silver deposits at the rate we used to. According to S&P Global Market Intelligence, silver discoveries have been declining for years. The average grade of silver ore has dropped from about 12 ounces per ton in the 1990s to less than 8 ounces per ton today. That means miners have to process more rock to get the same amount of silver. That increases costs significantly. And speaking of costs, The all-in sustaining cost to produce an ounce of silver is estimated to be around $21 to $23 per ounce for most major producers. With silver currently trading in the low 30s, miners have decent margins. But they're not exactly getting rich. Compare that to gold, where miners can make significantly higher margins. This means there's less incentive to explore for and develop new silver deposits. Let me show you what some of the major mining companies are reporting. Pan American Silver, one of the largest primary silver producers, reported that their production was essentially flat year over year. First, Majestic Silver saw a slight decline in production. These are not companies that are ramping up supply to meet demand. In fact, many are struggling just to maintain current production levels. Now, let's shift gears and talk about industrial demand, because this is where silver's story gets really compelling. Silver has the highest electrical conductivity of any metal. It has the highest thermal conductivity. It's the most reflective. These properties make it absolutely irreplaceable in many applications. Take solar panels. Every solar panel requires about 2/3 of an ounce of silver, and solar installations are exploding globally. In 2023, the world added 413 gigawatts of new solar capacity. To put that in perspective, that's more than the total solar capacity that existed globally in 2017. China alone is installing solar at a pace that's hard to comprehend. They added 216 gigawatts in 2023. That's equivalent to building a large nuclear power plant every single day. And this trend is accelerating. The International Energy Agency projects that solar capacity will triple by 2030. If that happens, silver demand from solar panels alone could exceed 300 million ounces per year. That's more than double current levels. Where's that silver going to come from? Nobody has a good answer. Electric vehicles are another massive source of demand. A typical internal combustion engine car uses about 15 to 28 grams of silver. A hybrid uses 18 to 34 grams. But a fully electric vehicle uses about 25 to 50 grams. And we're talking about millions of EVs being produced each year. In 2023, over 14 million electric vehicles were sold globally. That number is expected to grow to 40 million annually by 2030. Then you have 5G infrastructure. Every 5G base station uses significantly more silver than 4G. And countries are racing to build out 5G networks. China has already installed over 3 million 5G base stations. The US, Europe, and other regions are billions of dollars into their own 5G buildouts. Each base station requires silver for antennas, circuits, and connections. Medical applications are growing too. Silver has antimicrobial properties, which makes it valuable in medical devices, wound dressings, and even in fabrics. The medical silver market is relatively small compared to industrial uses, but it's growing at double-digit rates annually. Here's what all of this means. Industrial demand for silver is structural, not cyclical. Companies aren't using silver because they want to. They're using it because they have to. There aren't good substitutes for many of these applications. You can't just replace silver with copper or aluminum and expect the same performance. Engineers have tried. The technology doesn't work as well. And this brings me to a critical point about silver versus gold. Gold is primarily a monetary metal and a store of value. Industrial use accounts for only about 8% of gold demand. For silver, it's the opposite. Over 50% of silver demand is industrial. This means silver benefits from both investment demand and inelastic industrial demand. When you combine those two forces, you get very powerful price dynamics. Let's talk about the macroeconomic picture, because what's happening in the global economy is setting up perfectly for silver. We're in an environment of persistent inflation, geopolitical instability, and growing concerns about currency debasement. These are textbook conditions for precious metals to shine. Look at what central banks around the world are doing. The Federal Reserve expanded its balance sheet from about $4 trillion before the pandemic to nearly $9 trillion at the peak. Even after some reduction, it's still sitting at around $7.7 trillion. The European Central Bank, the Bank of Japan, the People's Bank of China, they've all engaged in massive monetary expansion. When you create trillions of dollars of new currency, it has to go somewhere. And historically, a portion of it flows into hard assets like precious metals. Now, interest rates have gone up significantly from their pandemic lows. The Federal Reserve raised rates from near zero to over 5%. Normally, higher interest rates are negative for non-yielding assets like silver. But here's what's interesting. Silver has held up remarkably well despite rising rates. Why? Because real interest rates, when you adjust for inflation, are still relatively low, and more importantly, investors are starting to question whether central banks can keep rates high without breaking something in the economy or the financial system. We've already seen stress in the banking sector. In March 2023, Silicon Valley Bank collapsed. First Republic Bank failed. Credit Suisse had to be rescued and merged into UBS. These weren't small regional banks. These were institutions with hundreds of billions in assets. When banks fail, confidence in the financial system erodes. And when confidence erodes, people look for safe haven assets. Gold and silver benefit from that flight to safety. Geopolitical tensions are also running high. The Russia-Ukraine conflict is ongoing. Tensions between the US and China over Taiwan remain elevated. There are conflicts in the Middle East. Each of these situations creates uncertainty, and markets hate uncertainty. Precious metals thrive on uncertainty. But let me give you something even more specific to watch. The BRICS nations, Brazil, Russia, India, China, and South Africa, plus several new members, have been openly discussing alternatives to the US dollar for international trade. Whether or not they succeed in creating a new reserve currency, the mere discussion of it creates doubt about dollar dominance. And when people doubt the dollar's long-term stability, they buy gold and silver. China is particularly interesting to watch. They've been accumulating gold reserves at a steady pace. Their official reserves have grown, but many analysts believe they're buying far more than they report. Why does this matter for silver? Because historically, when gold prices rise strongly, silver follows with even more volatility on the upside. The gold to silver ratio I mentioned earlier tends to compress during precious metals bull markets. Now let's talk about technical analysis, because the charts are showing some very bullish patterns. Silver recently broke above its 200-day moving average with strong volume. That's a significant technical signal. We've also seen a golden cross, where the 50-day moving average crosses above the 200-day moving average. This is typically interpreted as a bullish long-term signal. If you look at the weekly chart, silver has been consolidating in a base pattern for almost 2 years. This kind of base building often precedes major moves higher. The longer the consolidation, the stronger the eventual breakout tends to be. And we're seeing increasing volume on up days compared to down days. That's a sign of accumulation. From a Fibonacci perspective, silver has key resistance levels around $34 and then $38 to $40. If we break through those levels decisively, the next major resistance isn't until the mid-40s. That would represent a 40 to 50% gain from current levels. But here's what you need to understand about silver. It's a low liquidity market compared to other assets. The entire global silver market is worth maybe $1.4 trillion if you include all above ground silver. Compare that to the global stock market, which is over $100 trillion, or the bond market or real estate. Silver is tiny. What this means is that when capital flows into silver, prices can move violently. A relatively small amount of money can have an outsized impact. We saw this in 2020 and 2021 when the Wall Street Bets crowd got interested in silver. Prices spiked from around $18 to nearly $30 in a matter of weeks. Now imagine what happens if institutional investors, sovereign wealth funds, or even a small percentage of retail investors globally decide they want exposure to silver. The market simply can't absorb that kind of demand without prices surging. Here's my bottom line. I'm not telling you that silver is going to double next month or next quarter. I don't have a crystal ball. What I am telling you is that the fundamental setup for silver right now is as strong as I've seen it in over a decade. You have supply deficits, surging industrial demand, favorable macro conditions, technical breakouts, and a market that's still relatively under-owned by institutional investors. If you own silver, I think holding it makes a lot of sense right now. If you're thinking about buying silver, I would seriously consider starting a position. Dollar cost averaging is probably the smart approach. Buy some physical coins or bars, maybe allocate some capital to silver ETFs or mining stocks for leverage. Diversify your approach. And one more thing, don't put all your eggs in one basket. Silver should be part of a diversified portfolio, not your entire net worth. But given everything I've shown you, having zero exposure to silver when these fundamentals are playing out seems like a missed opportunity. The data is clear, the trends are clear. The question is, what are you going to do about it? Thanks for watching, and I'll see you in the next one.